Hi guys, Alex here with Serious Luxury Properties, and welcome to another edition related to real estate in the UAE. Today I want to walk you through what the top areas for investment are in the coming year in 2026 in the United Arab Emirates. I will break it down by emirate and locations and projects and price points as well, so that by the end you'll have a comprehensive understanding whether the region even makes sense to invest in anymore, and if so, where are those top opportunities that will provide the highest yielding results for you and your family. So let's dive right in. If we take a look at the map, let's segment the top three areas are RAK or Ras Al Khaimah, Dubai, and Abu Dhabi. Now, this year, we've seen some interesting trends where in the past, I've sold a lot of properties in Ras Al Khaimah. I have a lot of clients there, and the investments up until now have been good. However, at this point, I probably would steer people away from investing in the region. The reason is it's already fairly saturated. And as before, I said, if you're on Marjan, great. If you're in the surrounding areas, maybe a little bit more tricky. Why? Because first of all, the market is still unproven, and we have yet to see what the actual tourism numbers will be once the casino launches. I'm excited for the casino to launch. It's already nearly complete. On the outside, it's set to open in early 2027, so just a little bit over a year from now. Now, the surrounding areas, namely Al Hamra and Mina Al Arab, have always been a little bit more difficult investment because there you're relying not just on the tourism flow, but also on the people living there, so residents. And even though the residential community, the number of residents in the emirate is set to increase by a few 100,000 over the next 5 years, it's still tough to say how well we can rent them out. Specifically, I think branded residences, as always, like Anantara here, will do well. I think Falcon Island will do well as Ellington Views. There's supposed to be a few other developments here on the beach, potentially. We'll examine them when they come out. But as with anything, ideally you want to be on the island. And even on the island, on Al Marjan, there is a segmentation of projects. I have usually, most of my clients are in either Nikki Beach, Ras Al Bay, here at the entrance, and Costa Mare, La Mer, Nobu, and that's mainly it. There are a few others throughout, but generally what's going to happen once the casino launches and people are coming to the area? Well, first, they're going to pick hotels in general. Hotels will generally win for smaller units like one-bedroom studios because it's simply less hassle for people to stay in a hotel with all the amenities there. So this means that hotels like JW, like W, like a few of the other ones are going to be picked first, Ushuaia as well, Nobu. And then there will be, the next tier will be residences, especially complexes with fantastic amenities, brands. So that means Nikki Beach and Ras Al Bay. That means Address over here from Amar, Fairmont maybe, and to an extent, that's it. And then there will be the next level of residences, from my perspective, which are high-end, will have great amenities like Oyster, like La Mer, like Costa Mare, and and a few others. But in general, these are going to be the main ones, and after that, it will be everyone else, which will be up to the market to determine. So generally, people who are buying investments here in the middle of this island, I think are going to have a more difficult time renting them out. And the ones that are here along the water, like from Range Developments, there's another Ellington development here at Cala del Mar, Playa del Sol. I think they will do well, but it's up in the air. What's happened is the price has at this point increased almost to 3,000 to 4,000 per square foot plus. And at this point, I would advise everyone who bought here to hold until after the casino launches. In some cases, that might be a little bit after your handover, but for most part, most projects are going to be delivering after the casino delivers, which is fine because we want to see how the market actually forms and how many people actually come to the area. So, short summary of RAK, people who've invested over the last few years, you're in a good position. depending on the project and the specific unit that you got. But for right now, I would advise you to just hold and wait for the magic of the UAE strategy to unfold. You might ask, will there be additional casinos? The answer is probably yes. The question is where? Likely everywhere. Likely in Abu Dhabi, likely in Dubai. And there's also statements from the Wind that they have another plot for a casino here in Iraq. And if you look at what's happened in other regions around the world when multiple casinos have opened in the same area, there actually was not a cannibalization effect, but additional income from tourists, additional tourism flow. And that's likely to happen here as well. I think Iraq has a long way to go, let's say a lot of potential to develop beyond just the casino. And I'm excited to see what the UAE will do next in terms of their overall development strategy. Surrounding areas, some clients have asked me about Saadiyat Island. I don't advise it simply because from my perspective, Al Khaimah is in the middle of nowhere. I don't know a single person who wants to go there, just maybe some locals go there for the weekend. But the prices that they're charging, and it's entirely dependent on Al Marjan, given that it's already fairly saturated, I wouldn't advise it. And if you bought something here, I think you're stuck holding it until the handover, simply because units prior to handover are very difficult to exit. Only very close to the handover can we reasonably expect a resale. Let's move down to Dubai. In Dubai, as always, I am in favor of beachfront areas, exclusive projects, private projects, branded projects. Why? Because when we look at the market as a whole, which has been doing 15 to 20% annually, increasing in the last couple of years, people ask, will there be a correction? The answer is most likely, but the question is where and which segment? Because if we look at areas that are farther out, that are oversupplied, like JVC, for instance, that's the most likely area to be hit by corrections. Where there is lower budget segment, a lot of Benghazi projects fall into this. So anything in the sub 2 million dirham range probably is most likely to face a correction because there is an oversupply of that in the market. What there is a shortage of still is luxury properties. I have clients who want to buy penthouses or villas in the highest end buildings here, and it's difficult to find because there's literally 3 to 5 buildings in Dubai that meet their standards. And right now there's a very short supply of these properties. And so by investing in those, you can meet existing demand and growing future demand. And so I personally believe those are still the best investments. And if you think about it logically, anything that's out here, look how much open space there is, how much desert there still is. There are so many communities that can and most likely will be launched here. And this means when we're exiting, we need to compete with 1,000 or a few thousand other people who are trying to do the same thing at the same time. So that makes your unit a lot more difficult to get noticed by potential buyers. And the idea here is focus on exclusive projects where there are only a few units available, especially if we're talking about 4 bedrooms, 3 bedrooms, penthouses, unique villas, and it will be a lot easier to exit those. Experience has shown this to be true. Also, the beach line is less than 1% of the land in the UAE, and in general, I think it makes sense that when you have something that's a limited quantity, that with rising demand, considering the amount of people and especially high net worth, ultra high net worth individuals moving to the UAE, makes sense that these properties will be in demand. So where does this leave us? In general, I would say Dubai Island's a maritime city, where Dubai Island's probably A rating for me for investment for right now, specifically Island B, where I mentioned in a prior video, Beyond just launched a project, Master Community, Sayora, and Ellington will be launching a project here as well with a similar community in the coming months. Nakheel is going to be building another villa community here on Island E, which could be interesting. So just be ready to watch that. We can probably start submitting expressions of interest soon here as well. And these 2 islands, we'll see. There's supposed to be golf courses there. There's supposed to be hotels there. I haven't seen updated master plans on this yet, but expect launches to happen in the coming year here. Island A, I would avoid. because it's kind of like JVC on the water, many random, sometimes first-time developers building here. I think it's a mess. There were some target projects here, like we can nitpick and find something like Ellington and a few MTS projects, but otherwise, it's always advantageous to be part of a master community, because when we exit, and we're exiting generally to end users, as well as other investors who want to rent out to end users, they want a complete community. So this means focusing on Island B, Island E, and the other islands from high-end developers like Beyond, like Ellington. I think Nikhil will do well, and Avenue projects here are quite good as well. So it just depends on availability at the time that we're discussing these particular projects. The timeline here, I think, for exit is 3 to 5+ years. It might be a little bit longer hold, simply because this entire area will take longer to develop. You see how big it is. Why is this the case? Because appreciation depends on not just your building being complete, but the entire infrastructure around that building to be complete, because it needs to be a livable community. Those who've been in Maritime City when it was just Anwa standing there know what I'm talking about, because you walk outside and inside it might be okay, but you walk outside and it's just, you know, desert and tumbleweeds blowing by. Not really such a great experience. So the completion of the master community, or of the community overall, is key to then a successful and profitable resale. Moving down the line, we have Maritime City, so Port Rashid from Amar and Beyond building over here in Maritime City. I would kind of raise this to, or lower this to, a B- from my A rating before at this point, unless you're buying for end use. Why? Because there is already an oversupply of units here. I think they're launching newer and newer ones by the water, so it could be good from an end user experience, but the prices throughout the area are already quite, I think, high. And if you're thinking of resale, it's going to be difficult for us to resell with a reasonable profit, considering the amount of phases that came before you, who bought at a much lower price. Just as an example, a year ago in Orise, in the first part of the Beyond community, 3 bedrooms, Seaview 3 bedrooms were 5 million dirham. Now they're closer to 8 to 9 million plus. And yeah, that's on one hand good for everyone who bought in earlier phases. On the other hand, people buying in newer phases, it's going to be tougher to exit. So here, I think there's still options, maybe in the forest region, less so here on the water, depending on the unit, but mainly for end use would be the target here. And of course, now we just wait and see how the market develops, what they do, and how quickly they move these industrial operations over to Jebel Ali. And overall, I give this area a little bit lower than Dubai Islands. Of course, here we still have La Mer and we have Salaya, still launching a few buildings. That's A++ from my perspective in terms of ratings. And yeah, they launched the first ones here already. They are launching some additional ones here on the island. 2 bedrooms start 15 million. 3 bedrooms about 22 to 25 and so forth. I would consider buying a unit there myself. Then we have the rest of the Jumeirah coastline. And if we move down, I know that H&H and Aman and Rosewood are building some things here, but these I would say are mainly for end users who like the brands. If we move down the coastline, we have a few options like Paso from Beyond here on Palm Jumeirah, which I think is decent. Orla from Omniat. Still possible to find some good investments here. Of course, the minimum price tag is going to be, I would say, 8 to 10 million and onwards in dirham. For the coastline in Dubai, generally that's it until we get to Palm Jebel Ali. Here, the fronts have mainly been launched. They started launching some projects here on the trunk, and I think these are good investments, but the holding timeline will be 5 to 10 years because the entire area will take that long to develop. In the coming year, expect to see projects from Ellington, expect to see additional Nikhil projects, and here, if you're okay holding as part of your portfolio something for 5+ years, selling after handover, renting it out, this area will do well. And I think the area underneath it will as well. just this is a, let's say, lower income area, and it will take longer to develop just given the size. So people who are buying near Expo, I personally think it's an okay investment, maybe a C, maybe a B minus. Why? Simply because there's better investments to be had that will yield you more in the coming 3 to 5 years. I would say if you want to hold it for a longer period of time, maybe just have some passive income, I think it could be good. But in terms of maximizing returns, out here, probably not the best idea. I want to talk about some of the other areas. Dubai Hills, fairly saturated at this point. This Dubai Hills is a great example of what happens when you have a master community that has a mall. It's built by mainly a single developer, and villa prices are still increasing here in Dubai Hills. Apartment prices are increasing. But if your investment style is resale, buying off plan and then resell, probably not the best option unless we look for some distressed deals. I think Dubai Creek will also do well if you want to hold for 5 to 10 years, simply because you have this entire area yet to be developed. So it's great for living here in Dubai Creek. It's one of my favorite areas. But in terms of rentals and resales, here it's tough because there's a lot of supply. And this is a long-term bet here from my perspective. Once again, for prices lower than 3 to 5 million or around that range, could be a good option if you want to build a eventual passive income portfolio. But Business Bay, I think, is oversaturated, frankly, downtown to an extent as well. The surrounding areas, sometimes there are good launches here, for instance, like Eden House Zabil, which is closer to the branded side of things. You have Al Shiba Gardens and H&H launching a new project here shortly as well. So in some specific scenarios and cases, it's possible, but we really have to see how the investment coincides with your particular target exit time frame and the target return on investment you want to make. Just overall, the highest returns you will make on capital invested is investing early stage of a master community, exiting 3 to 6 months prior to handover without making the secondary payment. There are other investment styles as well, like buying an existing villa, for instance in Dubai Hills for like 8 million, investing 2 million into upgrading it and reselling it for 13 to 14 million. Also possible, just requires more legwork. It's possible to buy plots of land, and you can also have significantly higher returns, like 100% plus. But once again, separate discussion. I'll keep my focus here on the residential side. I will touch shortly here in Dubai, there is an emerging more and more a commercial market play where there's a limitation of commercial buildings in the area. And we've had some launches from Beyond here in Maritime City, which I think is good because it's the only area. This covers this entire area coastline for potential tenants. In Business Bay, I've talked about Lumena and Lumena Alta from Omniad before. Very limited number of luxury office buildings in Dubai, fewer than 5, I would say. And that project particularly, I think is great. There are a few others in a slightly lower segment. And why is commercial interesting? Well, A, diversification from residential. B, especially when they get delivered shell and core, the tenancy contracts tend to be 2-3 years plus rather than 1 year for residential. So it gives you more predictable cash flow from passive income standpoint. If you want, you can reach out, we will discuss. Now, let's move on towards this side, towards Abu Dhabi. Overall, I think, as you see, there are a few key areas in Dubai at this point that will provide 50 to 80+% returns. We can go through the financial models to show you how I got that. But in general, I think you have a clearer picture now. Moving on to Abu Dhabi. We have Bain by Aura. I think this is still a good investment. I have some clients here. They launched the villas here to an extent. They're launching mansions by the water now. Prices are around 9 to 20 million plus, and expect to see new launches here from the developer for residential apartment buildings. And I think this will be a good investment. Why? Because it's 10 minutes away from the new Palm. about 20 minutes away from this side of Dubai. And so all in, for people who are living in Dubai, can easily commute from here. Because over here we have Al Jerf, and Ohana and Imkan are building properties here as well, some branded residences from Jacob & Co. We have Shah, a luxury wellness brand building here on the island. I like this community, but I like it a little bit less than Aura because of the location. So Al Jerf is 30 minutes to Dubai, 30 minutes to Abu Dhabi. And if you've been, for instance, in California, you know what it's like to live somewhere in the middle between San Francisco and Silicon Valley. You end up kind of going to another place. And I kind of foresee a similar problem here, where if you stay in the community, it will be great because you'll have everything you need. But if your lifestyle involves driving to both Dubai and Abu Dhabi, I think a 30-minute minimum commute can be a little bit long, at least for me personally. I like my 15, 20-minute commutes. Now, this area, by the way, here, this beach line, water line, expect to see some new developments here as well, likely from Nakheel or Modan, most likely, so yet to be determined. Let's move on to Abu Dhabi. I also would grade Abu Dhabi A, specific areas here. We have Yas, which I have a little bit difficulty with, simply because it will take a while for Disneyland to be built and a while for the property prices here to go up. Depending on the pricing, potentially we could get some units here for a passive income portfolio, but especially this side, its proximity to the airport and airplane noise make it a little bit more challenging from an investment and livability standpoint. We have Fahid, which I like, but only maybe for the beach line. The ones that are in the second row, I probably wouldn't advise, simply because it's close to the road. It's a big highway if you haven't been there. And though they're doing some things to isolate the noise, still will have some challenges. The beach line and proximity to Disneyland, which is over here, I think will do well. Starting prices there for good 2 bedrooms, about 6.5 to 8 million. Then moving on to Saadiyat. This is arguably the best area of Abu Dhabi at the moment. We have Mandarin, Nobu, Four Seasons, which still some units available here. That's a fantastic investment. From my perspective, there's still some opportunities sometimes, especially when Aldar runs promotions that have 30-70 payment plans. Like we have a client here in Mandarin with a 30-70 payment plan. And I think that will provide over 100% returns on capital invested, simply because of the payment plan and because on how limited branded residences are in Abu Dhabi. More and more museums are opening. This area is one of the most desirable places to live here. Still a shortage of space, so this is an area to focus on. We have Al Reem Island. Here, I have some questions. Because A, it's a lot of developers with their own plots and not really super cohesive community, and B, because it's going to take a while for everything to be built up. I think this is the lowest priced of all the areas in Abu Dhabi at the moment with off-plan, and if you're okay holding it for 5+ years and you have a limited budget, this could be an area to examine with very specific projects like Mered, which builds high-end, high-quality projects. Look out for some new launches on Maritime Island. I think you'll be pleased with those. As mentioned in the Abu Dhabi development plan, Lulu Island stands to be developed in the future as well, so we will see. But as with anything, you understand, new island, close to Saadiyat, early stage of the community, good for an investment. And then we have Hudayriyat, single master plan for Modan. I think fantastic investment here. Villas, sometimes still possible to get cancellations, somewhere between 8 and 15 million plus. Depending on the size, of course, they go up from there. They launched some new apartments here called Bashair, and there, even 2 bedrooms were relatively cheap, I think, about 3.5, 4 million with a good payment plan. I think it was 40/60, I believe. So all in, I think this area is another one to watch with new launches coming in 2026. So let's zoom out. and I want to maybe summarize. RAC, bottom line, hold on to it, wait. It's not possible even to exit. Very difficult right now until there is a secondary market formed. Likely that will be after the casino launches, so hold on to things until 2027. Dubai, we have Dubai Island, specifically Island B, E, to watch in the coming months. Definitely some good investment potential there. If you have a higher budget, branded residences or close to branded residences on the waterfront, like Salaya, like Jumeirah, Sora Bay, potentially cancellations from apartments there, though it's not likely. And we have Palm Jebel Ali. Those are the main areas to focus on in Dubai, with some additional branded projects here and there, usually from H&H. Then we have Abu Dhabi. Abu Dhabi, we have Fahid to an extent, if it's the front line. We have Saadiyat, if it's branded residences or really good payment plans. And we have Hudayriyat Island, with some new launches coming on Al Reem as well as Maritime Island. So that gives you a sense of the locations and the projects. Generally, the developers to watch are in Abu Dhabi, Aldar and Modan. These are going to be the main ones, though we're going to see new entrants from Dubai to Abu Dhabi. Generally, otherwise it's Ellington, it's Miras, it's Nikhil, and Beyond and Omniat, with a few additional boutique developers here and there. Usually, like Dimak, Danube, Azizi, they are, from my perspective, are more challenging investments because generally their aesthetic appeals to, let's say, a specific demographic that likes, black and gold and specific design styles that, frankly, is very difficult to exit to other people in the world. It's popular with the Indian community, and I can see from some perspective the appeal if they want to live there, but the appeal is limited to other investors around the world. And if our focus is on maximizing return potential, sticking with developers that have minimal contemporary design styles that are bright and white, let's say bright in terms of lighting, generally is a better idea. So in terms of price segments, as always, generally the price segment of 20 million dirham plus is going to be the one where you can have returns of 80, 100% plus, because these are going to be branded residences, penthouses, etc. Still huge shortage of those. When you're talking about the 10 to 20 million range, still possible to find some options like 2 bedrooms in Salaya or in Paso on Palm Jumeirah. Sometimes you can get a good villa by the water like in Bain. If you have a 5 to 10 million dirham budget, they're generally focusing on apartment buildings, potentially in Dubai Islands as well as in Abu Dhabi on Hudayriyat. And if it's the sub 5 million dirham range, that's where it starts to get tricky, and it's a case-by-case scenario. I generally don't advise people invest in 1 bedrooms or studios, simply because when we're exiting, we're generally going to be exiting to families. Families tend to make more emotional decisions. People don't save money on kids. They want to have the best for them. And so it's easier to exit to families, and they're always going to be looking 2-3 bedrooms plus. And the data supports this, because in the same time span in waterfront projects in Dubai, 1 bedrooms, for instance, and it was about 3 or 3.5 years, 1 bedrooms grew by 70%, 2 bedrooms 90%, and 3 bedrooms 115%. So even within a particular building, by unit type, there's a difference in appreciation. And my job is to help you maximize your returns for you and your family, or find the best possible place you can live, where you can enjoy life and the UAE to the fullest. So thank you guys for watching. Hopefully it makes it a little bit clearer of what's coming in 2026, where to focus and what maybe to avoid. I enjoy connecting people to the region. Let's say my primary goal is not to sell you something, but to make sure you make wise investment decisions. This is how I work with my clients. And if this resonates for you and you share my values, you can reach out through the link below the video, and I'm happy to talk through with you what your specific portfolio strategy is and see how we can work together. Happy upcoming New Year, happy holidays. Wishing the best for you and your loved ones. Thank you guys for watching, for subscribing. My name is Alex. I'll see you next time.